Well, welcome back to another session where we're going to discuss privacy. And I'm excited again to have Aaron come back, who leads all our revenue sales at Houdini, having him our chief revenue officer, going more in depth on privacy and why it actually matters. Well, welcome back, Aaron. Glad to have you.
Yeah, thanks. Appreciate you having me back on. Great to see you, Steve.
Let's kind of dive right into this because there's a lot over crypto Twitter about privacy, and there's good and bad. People tend to put a focus into privacy, maybe being a bad word within crypto, but I know you and I believe it is completely the opposite of that. And it's an important aspect of crypto and the blockchain. And for it to succeed, we need privacy. Let me throw it to you so you could expand on why privacy actually matters and why those statements about privacy being a dirty word is actually a really important word in the growth of the blockchain.
We have really strong views on privacy. Obviously, there's a lot of misinformation. And I really just think that the lack of information around privacy, it roots in just the nascency of crypto, right? It's still an emerging industry. For a lot of us, there's a lot of new capital that's flown into the markets over the past year. So with more education and more spaces like this, people can just gain a better understanding of what privacy is and what privacy isn't. Privacy, from our eyes is almost analogous to security. When we position Houdini Swap, we like to put it in the category of OpSec, right? So you think of things like Brave browser or VPN, cold storage, and then there's Houdini for your transactional layer of privacy. And I think privacy just at the individual, especially when you speak to the people on crypto Twitter, very opinionated, very loud. They miscategorize privacy as having something to hide. But the way that we believe about privacy is more just about sovereignty and optionality and having the option to choose to go private. The use cases that we're solving for in the context of privacy are just very, very normal use cases, payments, payroll, trading, treasury management, financial ops, vesting contracts, lending, borrowing. It's not this dark arts that often, crypto Twitter seems to pick up on.
Yeah, it's so interesting because you hit on one topic in there. I mean, it's super important is when you think about neobanking and payroll, right? The idea that people will eventually run their payrolls, and it's starting to happen, right? We're seeing companies form and businesses offer the ability to make payroll in stablecoin. The privacy of your wallet within that is going to be really important because your bank account details, when you get paid by ADP or any of these other guys, payroll companies, the money comes in ACH. Nobody ever sees your balance. Nobody ever sees your wallet. Now that we're starting to see this growth in payroll through USDC and stablecoins, a benefit of it is to make sure that you have it on a private mechanism and using things like Houdini to actually receive it in, which is coming, or for you to then use that money and pay bills. That's really interesting to me on how that has to get that way through payroll companies. There doesn't seem to be another option to me.
Yeah, 100% to kind of front run, the trends here and what we're seeing in terms of flows and adoption. I actually think that privacy over transactions, and specifically when there's a bit more sensitive information like payroll, I think privacy for transactions will actually become the compliance standard that businesses are almost forced to adopt. To give an example, I just got invoiced from my accountant for tax season, and he just sent me a 0x wallet address. As I do running a privacy exchange, I took the wallet and I did some investigating on Etherscan. And I just called him up and I said, hey, I can obtain all this sensitive private information just by virtue of you sending me public keys to submit an invoice. He kind of had this enlightenment moment where he calls up his executive associate and they transfer their whole operational system onto Houdini. I could see what he had been paying other employees. I could see where they're investing their treasury. I could see P&L on the wallet, all the previous funding history in the wallet. Almost like you just give someone your email address to send an email to, and suddenly they have access to all your contacts, every email you've ever sent. You're feeding this LLM that we call the blockchain, all this sensitive data, and it's financial data, which is literally gold. And so we're just giving users the option. We're not in your face, but we're just giving people the option to do so. All the reliability, all the user experience, all the stuff that we know and love in crypto.
Yeah, that's interesting as well, because the access that people, and you and I live our daily lives, right? And you did that as a way to show how this stuff becomes public. Most people live their daily lives and aren't really thinking about those aspects, but we know the bad guys are, right? There are a lot of people that will prey on that public information. That's why I think it's so important to understand what we're trying to do. We don't live in glass houses, so why were you making your financial information in that glass house? And you just laid out one area that made it and showed it to who you sent the money to. But at the same time, there are people who are actually scanning the market to look for that information. That's what scares me. That's why I'd be like, let's not avoid the blockchain, because that's exactly where the financial markets are going. They're going on chain. We're helping you navigate that with what we're doing.
Yeah, absolutely. It's a tool more than anything, right? Like, I think a really interesting case study to look at is Brave browser, right? 110 million users that are using this browser just to avoid ad targeting, right? And surveillance economy. It doesn't always have to be these bleak and bespoke and niche use cases. Think of how much Adidas and Nike pays per year to Visa and MasterCard to get all of Steve's transaction history, right? So they can retarget you for the next set of sneakers or the next set of apparel, right? And so some people just don't feel comfortable sacrificing that level of data. But you just can't do anything about it because you're in a system and you're encumbered into that system, and you get given these set of financial rails, and it just becomes second nature to you. But it's for us and for all the users that are just kind of blindly transacting on chain, you're feeding these models, and it's going to be repurposed, reprogrammed, and shipped back to you, whether it's advertising, whether it's an NFT, whether it's dust or gas sent to your wallet, whether it's a social engineering scam. There's a whole range of outcomes that probably aren't the best for an individual. So we're just trying to protect against that way, in the same way that Brave is trying to protect against phishing and Google ads and harvesting really, really important financial data that's for the user.
110 million users on Brave. I remember when that started. It had to be less than 8 years ago, 6 years ago. 110 million users. When you say that number, it just makes me think where we are in the early stages of having privacy within your own wallet and where it actually can go to. Right when Brave started, I remember getting the Brave extension and using it sporadically. And now 110 million users, like legging into the privacy on the wallets is probably could be far greater than private browsing. It seems to be a market. If you looked at it from a TAM, the addressable market's probably layers above 110 million.
Yeah.
You got to believe that, right? I mean, it seems to make logical sense. Financial data versus kind of advertising.
100%. I mean, they, when they were probably, scoping out their TAM, they probably, did some sort of market analysis on privacy agnostic or privacy centric users, but really the TAM was just web browser users, right? Internet users. And so it's like their TAM is 8 billion global users across the population. And as crypto scales, I think that's the best thing about Houdini and the best thing about privacy that we say to people is, it's not a narrative. It's not a meta. It packages its way into every single thing that crypto is trying to achieve. It is privacy for stablecoins. It is privacy for store value. It is privacy at the application layer in the wallet. It is privacy for any like X stocks, pre-IPO markets. Insert your favorite flavor of the month. Privacy always finds its way into that because it's just giving people the option, the right, the sovereignty, the liberation around, do I want to show Steve that I'm holding 200 Bitcoin, or maybe I don't want to do that. That's all it is, right? Or, hey, I'm paying a consultant, Steve, for 3 months of advisory. Steve doesn't want to show Aaron, how much he's charging other clients. That's his right.
When you start thinking about it, is going to become one of the more important aspects of the blockchain. And when we segment, this thought of crypto and blockchain, right? The blockchain is where when things get done on. Crypto is a smaller subset of the overall blockchain. And blockchain is where the financials, all this is going to happen, and privacy is important there. A couple other things I want to touch on, but we'll go here first is, a lot of stories come back and Tornado Mix is in the news again, right? Like I think they're back in court, and the Tornado Mixer is far different from how Houdini operates, and for real good reasons too. But you want to give us a little bit of insight into how those two separate too, and why Houdini is nowhere near a mixer.
Yeah, it's a really good question, and obviously one that we get all the time. It's also really important to note that just, for a bit of lore, like we built Houdini about 4 years ago, and that was around the time when FTX was collapsing on one side, which was the centralized counterparty that everybody trusted. And then there was Tornado, which was collapsing on the other side, which were two options for privacy, by the way. But Tornado collapsed, and obviously the tech got sanctioned, and the devs were put in front of the SEC and still are today. So for anybody who's unfamiliar with mixing technology, I think the best way to kind of understand it for normies is, I put my one marble in a basket of 1,000 marbles. Maybe my marble's worth 1 ETH, and Steve goes and shakes up the basket of marbles, And I get to pull out my marble still. It's fungible, go purchase travel, or I can go fund a credit card with my 1 ETH, but it's randomized, right? It's not the same marble that I put in. The issue, though, with mixers is that I don't know what else is in the basket, right? It could have touched Lazarus Group's marble. It could have touched Bridge Exploiter or Hackers marble. It could have touched any marble, right? And the issue with that is that it taints my marble into perpetuity, meaning that when I go to just now transfer assets into Coinbase, or I send a relative a remittance payment cross border, now the paper trail, my tainted marble becomes their tainted marble, and just so on and so forth. And so I still have people that I know 4 years ago, 5 years ago, that are getting questioned left, right, and center about illicit funds, but really they were just trying to solve for the same use cases that we just talked about: payments, payroll, all these legitimate use cases that have their wallets tainted. So Houdini is obviously very different, technologically and just from an architecture basis, but compliance to us was front and center, right? We're operators of this business. No amount of revenue or volume or success or rapport for us is ever worth court cases or being in front of the SEC. So we made sure that Houdini was bulletproof and that users would never have to face this type of challenge or paper trail, which was basically the biggest thing that surrounded Tornado. The libertarian in me doesn't want to grave dance on Tornado, because at the end of the day, what they shipped was effectively just open source technology, right? And they just shipped something out to the world. So it's up to the world to decide whether there's good actors and bad actors of these things. Now, Houdini has serious controls in place to make sure that there is no bad actors. But I can sympathize for the developers of Tornado Cash that were just trying to solve the same problem that we are. They just were a bit earlier. And I just don't think that the compliance and the guardrails and the processes that we have in place were even available today. And then they also had the backdrop of like what was the white knight of perfect compliance regime, which was FTX. They had that collapsing right at the same time. Obviously, we've done everything we can, and we just got our H2 US legal opinion. So there's all these things that we do that make it fundamentally and architecturally different from a product perspective. We are not a mixer just by design, but I hope that gives people a better understanding of kind of what's happening in privacy.
Yeah, that really does. And I think the point about evolution too, and at the time something was built, is well received, I believe, because you build things at a point in time. And we all know we're still going through a debate whether or not the Clarity Act, which seems to have been around forever now in the US, are we ever going to pass it? And we're running out of time here, but we're still building in uncertain times. In every jurisdiction, every country has different rules related to this. And people are building things in still not something that's totally black or white. Trying to take high roads and do everything the right way is extremely important to us. But I could see how the open source code of Tornado, they might have thought they were doing, everything was good at that point. But that all rings back to privacy matters, because there's good and bad actors in the world. And you try to build for good actors, right? At the end of the day, you're building applications for good actors, and privacy on top of all that is just going to it allows certain segments of the consumer base to abide by it within a compliant regulatory manner.
I mean, Steve, you've been in this space, far longer than I have. We can even take this outside of crypto, right? Like you think about EVs when they first spawned, right? You had half the environmentalists saying that this is bullish, half the environmentalists saying that this is actually bearish. You look at Elon trying to ship FSD in the cars, half the tech crowd saying this is bullish. Then you have ones that didn't make it out of production and had issues. When you're shipping, I can relate and I resonate with the people that are just building and shipping innovative technology. There's always two sides to the coin. As long as you, the operator and owner of the business, know that you are doing everything in your power to ensure that it is safe and reliable and secure and not beholden by criminals for illicit activity, then at the end of the day, you can sleep easy at night. That's how we've been able to be operational for 4+ years and 4 billion plus. And here's to the next 40, right? I mean, it's not going away.
Every new technology goes through growing pains, and you're building. Another thing that came up and you just made ring a bell, the traditional markets have changed because of the blockchain and because of trading. 25 years ago, when we had active trading, everybody was active trading. Everyone was picking up their online trading account and trying to trade to make money all the time. And the government stepped in, and this was pre any real rules about who could and couldn't actively trade, or day trade was really the common name 25 years ago. And they put in this rule called the pattern day trading rule, that in the US, that if you traded more than 3 times or 5 times in 3 days in the same stock, you were considered a pattern day trader, and you had to have $30,000 in your account. In the last few weeks, they got rid of that. So it goes back to the point you made about technology and trying to solve and give people what they want, and then regulation comes in and you change that, and then it could change again down the line. Technology is always evolving. Things around TradFi, blockchain, things are constantly evolving. And another in the news thing that you and I started bantering about before was what happened last week in the trading markets, and the hedge fund Leopold, I forget his last name. It was kind of a weird one that Steve probably can't pronounce.
It's a long story, but I'll try and keep it short and sweet for most of the listeners. But basically, there's this hedge fund manager, Leopold Aschenbrenner. He's in his early 20s, and he basically started this fund called Situational Awareness very early into the AGI trade, long only hedge fund. It started with around $500 million of LP capital. He had Jane Street in there, and basically grew this hedge fund to, it was around 40 billion in net asset value. So generational run for Leopold, boy wonder of AI. Essentially, he was running a very, very concentrated portfolio of AI names. Most of these names are small cap public market equities. So Leopold was trading in such size with such leverage that it became very, very publicly known what he was holding. And the concentration of his holdings was basically being announced to the entire market. The issue with being long only is, as we know, markets go up, but markets also go down. So as these names started to retrace, he effectively got margin called. Goldman or JP Morgan calls up Leopold and says, hey, we need, $5 billion of margin by market close. And so now it becomes a liquidity crunch on Leopold, not necessarily a hedge fund blowing up per se, but an over levered, highly concentrated portfolio of public market securities that started to retrace, and with too much leverage, effectively got squeezed and got scooped up by the shark, which is Ken Griffin at Citadel. Privacy does not solve all of the problems that Leopold faces, but it definitely alleviates many of them. One of the biggest issues is that he was alerting so much public market signal to the sharks. As we know, in finance, it's effectively a PvP poker game. And if everybody knows your hand at the table, you're probably losing that poker game. And that's exactly what just unfolded in this past week. The reason why Houdini is so widely adopted now is because it's solving for that use case around trading, which is the fact that no major institution or high net worth individual, family office, or high net worth retail client will enter and exit positions with size publicly. There's a reason why we resonate so well with like the hyperliquid crowd and the top poly market traders and these types of archetypes at Houdini, because they've literally felt in like microcosms what Leopold felt, which is like every move I make on my trading chessboard is literally being broadcast into the world. And it just, I'm stuck. I can't sell. I can't buy. I'm stuck. I'm getting squeezed.
People,
you're
yeah, they're beating them to the trade, right? Like they know what's coming next,
yeah,
and they're beating them to the trade.
yeah,
And
yeah.
that's a really tough position
So tough
to try to manage around, right? Like you can't manage around that, especially in a lot of cases, big funds like that. I mean, it's just too much knowledge slippage that happens, and you can't beat them to the trade. They're going to be in front of you on those trades. It's insane what happened. It caused the whole market sell off, but now we're back. So
yeah, I remember Bill Ackman going on CNBC during COVID and like telling painting the story of how bad things were going to get, and and he, at the end of the day he's short all these names, right? And there's he's trying to cover his shorts, and so it's just like I always come back to the thing, which is just like we're just trying to give people the option around privacy. If they want to transact publicly, you don't just have to be a $10 million active day trader to leverage Houdini. There's a million use cases that we solve for. I even heard a story of somebody, they just got contracted by an employer and they got fixed salary plus vested token options. And these options came due and they sold some of their stock. And the company freaked on the employee because they could see right on the blockchain, hey, one of our new employees that was been around for under a year is already starting to sell a bit of their vested stock options. And the employee is like, I'm trying to pay my rent. Like, what? Why? Like, A, how can you see this? B, how is this right? C, the trust is gone. So it's just the one thing that was left out from crypto. So obviously, there's a lot of things, but the one in your face major thing that was left out from the 2008 white paper was privacy. And Web3 as an entire financial ecosystem can just so obviously not scale if everything is made publicly available. It's just not possible.
That option example is a really good one because it's kind of a two-sided argument from an employee standpoint. As long as you're abiding by blackout periods and trading blackouts and those rules, the traditional way of doing it is you've got to go get approval to trade your options. And I haven't been in one of those big public companies where I had to do that. When you do put that paper in and ask for permission, you're kind of crossing your fingers that like, I hope somebody doesn't get mad at me. Then it might take 3 days because they're sitting on it. And it's really, you're right if you have those options in that stock to trade it at your point in time. As long as you're abiding by trading restrictions a public company may have, it's your right as an employee to do it without question. I had never thought of that. I had been doing a little bit of reading about the flip side of that is making sure that you are abiding by the rules. But that is a problem within public companies too. And when more of these things get traded, the real world assets get traded on chain and the options get on chain, that allows employees that flexibility, which is a huge advantage to employees. And if you're trading stock, you're trying to do it into liquidity, not away from liquidity and causing any issues on the stock. So you're trying to do it into liquidity. But it's another reason why privacy matters. And another one we keep going back and forth on is the more you do research, the more you read, and neobanks are exploding, right? Like they're kind of everybody's starting a neobank. It's in reality, it's not that hard to do. You got some great wallet providers out there, and you can go to some of the best money movement companies, the MoonPays of the world, and you kind of start one relatively quickly. But you can't really hold a large balance in your Privy wallet with USDC and then start using it to make those payments, right? Like we talked about earlier. It's open to the public. Your neighbor gets to see it. I have one person who I know runs a wallet, told me like your neighbor never gets to see a wallet. I think otherwise. Huge opportunity in this space for privacy to matter. And I think that's the key. Privacy matters.
Yeah, 100% aligned. Things like payments, I mean, it's just such a ripe space for privacy, right? Peer-to-peer payments, at the business, at the enterprise level. It's so copy-paste at this point with our API. We have obviously our front-end traffic, and then we have our B2B API, almost privacy as a service or software as a service. It's upticking and it's gaining a higher portion of our overall volumes in the B2B model. What that signals to the market is that other applications, including neobanks and treasury management firms and OTC firms, are leveraging our stack to solve for these very, very real problems around payments, right? And even an expense report, like accounts receivable, accounts payable, like all of those things. Why would they?
What about vaults and on-chain lending? And as those things start to continue to explode, the movement of your funds to put into a vault or on-chain lending, you probably want some access to do that in a private manner too, right? Am I missing something there? Am I wrong? I'd love to have your feedback on other avenues that seem to be ripe for privacy.
Absolutely. I remember when I used to work at Fidelity, we always used to talk about benefits of being a private company, right? And a lot of that was just for the things that we talked about today, right? Is again, never something to hide. Like we still had to have great earnings, great business, great ethos, great culture, all the core competencies of a business. But we just didn't have to tell everybody everything all the time. We had that kind of selective disclosure, and it was never about something to hide. And it was actually the opposite. We did so much community engagement. From a business perspective, I always tell people that whenever they are engaging in some new vertical, AKA opening a new account or opening a new wallet or funding a new strategy, they ought to use Houdini because it breaks the link between all your other existing operations. So say, Steve, you and I, operators of Houdini, wanted to start a treasury management strategy, right? And we were going to deploy it into Morpho vaults. The olden crypto days, we might just fund that wallet from our treasury account, right? But then the treasury account is linked to our treasury strategy account, right? And maybe our treasury account is just for our rainy day fund, for payroll. But then we also want the treasury strategy fund to clip a yield, or we want to convert into stablecoins and do some looping. but I don't want those two correlated. And I don't want to alert to the entire world what our trading strategies are. That's our own proprietary IP. And so whenever I'm funding these new ventures, new verticals, new whatever, I always would Houdini the money to break the link. It's like having a completely fresh start with no prying eyes, no risk of getting front run or mev'd or all these other issues that we talk about. Yeah.
In closing up here, I mean, we talk about it so much, and I know we do internally, but at the same token, the aspect of keeping your life private in an on-chain transparent world, in a regulatory compliant on-chain regulatory, I don't know why you wouldn't lean towards using or being in a private mechanism. It just seems so logical to me. When you keep your traditional money or stocks at a bank or broker, it's private because it's commingled. Now that's the big difference here. You control more in a self-custodial wallet, but it's private. And the forefront of everything, being human is the aspect of privacy, right? It's what we all come to expect as industries grow is the privacy. We can go so much deeper and probably could talk even more. Give me your kind of closing thoughts on your personal belief and from a privacy matters aspect.
Yeah, I would just say like the people that resonate the most with privacy are the ones that have been directly impacted, whether it's trading, whether it's payments, whether it's payroll, whether it's treasury management, all the things that we've talked about, right? Like those people have felt it, they've lived it, they've experienced, a lack thereof of privacy. And so they're a natural tailwind for Houdini, and they come to us to solve their problems. For the mass market and those who don't know about privacy, I think it's just really important and really good timing to benchmark the Brave browsers and the Proton mails of the world, because they had the same question marks around them 5 or 10 years ago. Oh, this is too niche. This is such a, if you know kind of thing. Nobody's going to pay for privacy. Nobody cares about it that much. Fast forward 10 years, 110 million daily active users on Brave, right? I think what they got so right and what they did so well is they abstracted the privacy away and they made it frictionless. And so that's really the dream for us at Houdini is it can't be complex tech. It can't be overly expensive. It can't be something that makes you jump through a million different hoops to obtain. I do agree. It's not as exciting or entertaining, or it's not a perps. It's not a 10x, like I turned $1,000 into 10,000 or a million story. It's not a poly market that's FIFA World Cup. It doesn't capture that kind of entertainment speculative archetype, but it is just as important as the VPN. It's just as important as the cold storage. It's just as important as the Brave browser. The way that we've shipped it, I would argue, is the most seamless, frictionless, all-encompassing solution for privacy. And it's just going to become more and more available as we're seeing these top tier one integration partners offer it to their user base because they clearly see the value in it. This market just getting bigger and bigger and not going away.
Awesome. Appreciate the time today as always. And like I said, we'll probably do this a third time coming up at some point. There'll be more things to talk about, current events, things happening in the market. All right. One last question. Clarity Act passed this week, or are we sitting on it? What do you think?
I'm following Parley Market to a T. So I have my doubts. Not financial advice, but I have. But if you were ever going to place a bet on Poly Market, I would fund your account through Houdini to keep it private anyways. There's my soft shell. There's my soft shell. Yeah.
Thanks, Aaron. And we'll catch up soon.
Thanks, Steve.